Every trader dreams of creating a portfolio that seems untouchable, one that grows steadily, survives every storm, and wins regardless of market chaos. But let's be honest, most people are chasing the illusion of control, not mastery. They think winning is about finding the perfect stock, the perfect timing, or the secret indicator. It's not. The truth is, a portfolio that always wins isn't one that avoids loss. It's one that is psychologically immune to it. The real power lies in the mindset behind the portfolio, not the stocks inside it. You don't build a winning portfolio by predicting the market, you build it by understanding yourself within the market. Every decision you make, every buy, every sell, every hesitation reflects your internal beliefs about money, risk, and worth. If your mind is chaotic, your portfolio will be chaotic. If your emotions are disciplined, your results will follow that discipline. Winning in the market is not about outsmarting others, it's about mastering the internal dialogue that drives your decisions. Think about it, two traders can hold the same portfolio at the same prices at the same time, and yet one will panic while the other will thrive. The difference: belief and perception. One reacts to every fluctuation like it's a threat, the other sees each move as data. One trades from fear, the other from clarity. One loses control, the other stays composed. A portfolio that always wins isn't about never losing money, it's about never losing composure. Because when you remain centered, when your mindset stays neutral and objective, you can adapt. And adaptation, not perfection, is what keeps portfolios alive through every cycle. Let's talk about understanding, not guessing. When you truly understand why you own something, not because someone online told you, but because you've studied the company, its story, and its risk, your conviction becomes unshakable. You no longer need the market to agree with you immediately. You allow it time to align with the truth you already understand. Hope is what beginners trade with. Understanding is what professionals build with. The difference between the two is night and day. Hope wants the market to change so you can feel safe. Understanding accepts the market as it is and finds opportunity in its truth. When you construct your portfolio from a place of discipline, each position becomes a reflection of your process, not your emotions. You allocate capital based on logic, not impulses. You size positions not by greed, but by probability. You accept that losses are simply the cost of doing business, not the signal of failure. Consistency in performance is a byproduct of consistency in psychology. If your mind can handle uncertainty, your portfolio will survive volatility. If your emotions stay balanced, your returns will compound. But if your reactions are driven by fear, every drawdown will feel like disaster and every gain will breed overconfidence, both leading to destruction. The market rewards those who can act without emotional interference. It punishes hesitation, revenge trading, and overconfidence. It doesn't care about your dreams or your opinions, it only reflects your behavior back to you. Your portfolio is your mirror. If you want it to grow consistently, you must grow mentally. Discipline is not a rule, it's a habit of emotional control. You don't develop it by reading quotes or repeating affirmations. You develop it by acting on your plan even when your emotions scream otherwise. You develop it by taking the loss and moving on, by staying consistent when chaos surrounds you. The moment you accept that you can't control outcomes, but you can control actions, you start winning. That's the moment your portfolio becomes stable, not because the market changed, but because you did. You must remember, markets are designed to extract wealth from the emotionally undisciplined and transfer it to the emotionally neutral. Every panic sale funds someone else's patience. Every impulsive trade feeds someone else's process. Which side of that equation you stand on, that's your choice. A winning portfolio isn't something you build once, it's something you build every day through mindset, patience, and structure. You win by creating a process that can't be broken by a bad day, a red candle, or a correction. You win by making decisions that serve your long-term vision, not your short-term ego. The market will test you, it will make you doubt your plan. It will tempt you to chase, to fear, to hope. And that's when your mindset becomes your armor. Because every time you act in alignment with discipline rather than emotion, you're strengthening the foundation of your portfolio. Winning is not a result, it's a condition. It's the condition of emotional neutrality, of mental clarity, of self-awareness. The market doesn't hand out profits to the smartest, it gives them to the most stable. So if you want a portfolio that always wins, stop chasing perfection. Start mastering perception. Stop trying to predict the next move, start controlling your next reaction. Stop treating trading as a battle against the market. Start treating it as a mirror of your own mind. When you finally learn to see yourself clearly through that mirror, you'll realize the portfolio was never the challenge, you were. Everyone wants to know the secret. Everyone's searching for that one indicator, one strategy, one insider tip that can make them rich in the markets. But here's the truth, no one wants to hear the markets don't reward the person who predicts the future. They reward the person who can handle the present. If building wealth in the market was about predicting, we'd all be billionaires. Every trader, every investor, every analyst tries to forecast what's coming next, but the ones who consistently win are those who have learned to control their reactions, not the outcomes. Winning portfolios are not born from prediction, they are shaped by psychology. Because in trading and investing, your greatest asset isn't your money, it's your mind. Let's start with something fundamental. The market is unpredictable because it's made up of people driven by fear, greed, and emotion. Prices move not because of logic, but because of collective behavior. Every spike, every crash, every trend is a reflection of human psychology in motion. The irony is that while most traders try to predict the next move, they ignore the only variable they actually have control over: themselves. You can't control the market, but you can control your mind. And that's exactly where winning begins. A portfolio is a mirror of your mindset. If you're impulsive, your trades will be impulsive. If you're fearful, your investments will reflect hesitation. If you're greedy, you'll overexpose yourself and lose when volatility strikes. Every position you take is a direct reflection of what's happening inside your head. The charts, the prices, the news, they're all just noise if you haven't mastered your internal dialogue. Most traders lose not because their strategy is wrong, but because their psychology is weak. They can't sit through volatility. They panic when the market dips and get euphoric when it rallies. They trade based on emotion instead of logic, and that emotional instability translates into inconsistency, the one thing a portfolio cannot survive. Think about how many people buy a stock, then watch it fall slightly and instantly doubt themselves. They start checking their phone every 5 minutes, looking for validation from the market. Then, when the price dips again, they sell out of fear, only to watch it rebound the next day. It's not the market that made them lose, it's their inability to stay mentally neutral under pressure. Building a winning portfolio means you must learn to think in probabilities, not predictions. Predictions are rigid. They demand to be right. Probabilities are flexible. They allow for adaptation. When you predict, you're emotionally attached to being correct. When you think in probabilities, you're emotionally detached and focused on process. The difference is massive. Let's imagine two investors. One says, I know this stock is going up. The other says, there's a 60% chance the stock will perform based on the data I see. The first is already emotionally invested in being right. The second is prepared to manage risk if wrong. Which one do you think will last longer in the market? The market doesn't punish wrong predictions. It punishes poor emotional control. Losses are inevitable, but how you respond to them determines everything. If you take a loss personally, you'll chase it. If you take it professionally, you'll learn from it. Winning portfolios grow because their builders understand that losing is part of the process, not a sign of failure. The idea of an always winning portfolio sounds appealing, but in truth, what makes it possible isn't perfect selection. It's perfect psychology. A winning portfolio is one that survives every storm because its builder doesn't panic when the wind shifts. You don't control the weather, you control your sails. The difference between a professional investor and an amateur is how they handle uncertainty. Professionals accept uncertainty as the cost of opportunity. Amateurs treat uncertainty as a threat. The professional knows he doesn't need to know what happens next. He only needs to manage himself in response to what happens next. That mindset turns chaos into clarity and clarity into consistency. Think about the word consistency. Everyone wants it. Consistent profits, consistent growth, consistent success. But consistency doesn't come from the market. It comes from your ability to behave consistently regardless of market conditions. When your behavior is steady, your results begin to stabilize. That's why the best investors don't panic when others do. They don't chase rallies or dump in fear. They follow a process, one built on probabilities, patience, and self-control. They know that the portfolio reflects the person behind it. The truth is, most people don't have a trading problem. They have a thinking problem. They let emotions dictate logic. They define success by short-term outcomes instead of long-term discipline. They obsess over being right instead of focusing on staying aligned with their plan. They don't lose because of lack of knowledge. They lose because of lack of control. You must train your mind to be emotionally indifferent to both profit and loss. Because the moment you attach your identity to outcomes, the market owns you. You become reactive, desperate to prove yourself, and that's where mistakes multiply. A true professional can take a loss and remain emotionally stable, because he understands that losses are simply feedback. They're data points, not disasters. The real victory in trading is emotional neutrality. When you can stay calm while everyone else panics, patient while everyone rushes, and disciplined while everyone chases, that's when your portfolio begins to reflect true strength. The great paradox of markets is this: the more you try to control the outcome, the less control you actually have. The more you focus on what you can't predict, the more chaotic your decisions become. But when you shift your energy inward, when you start mastering your reactions, your discipline, your mental framework, you begin to gain control over the only thing that truly matters: yourself. And when you control yourself, the portfolio follows. You see, the market is not a battle between you and other traders. It's a battle between your discipline and your emotions. The traders who build wealth don't outsmart the market, they outlast their impulses. They don't let greed tell them when to enter or fear tell them when to exit. They let structure guide them. A winning portfolio isn't made in a moment. It's built over time through hundreds of disciplined decisions. Each decision is a test of your psychology. Each trade, each investment, each holding period is an opportunity to reinforce your emotional strength or reveal your weakness. The market constantly mirrors who you are: impatient or patient, fearful or confident, reactive or rational. The goal is to evolve until your reactions no longer sabotage your potential. Remember this: every market cycle exposes the unprepared and rewards the emotionally stable. In euphoria, greed blinds most people. In panic, fear paralyzes them. But the professional remains centered. He knows that emotions are the enemy of logic, and logic is the foundation of profit. There will always be uncertainty. There will always be volatility. But there doesn't have to be chaos inside you. The winning investor isn't the one who predicts every turn, it's the one who's psychologically balanced enough to stay on course when others lose control. Psychology builds consistency. Consistency builds confidence, and confidence, not prediction, builds wealth. So, if you want to build a portfolio that always wins, start with yourself. Study your reactions, observe your emotional triggers, recognize how greed whispers when prices rise and how fear screams when they fall. Then, create a process that neutralizes those voices. A process that keeps you grounded when your instincts beg you to act impulsively. Because the truth is, markets don't destroy people, emotions do. If you can't manage your mind, no strategy will save you. But if you can, you'll discover something remarkable. You no longer need to predict to win. Winning portfolios are not built on secret systems or lucky breaks. They're built on self-awareness, patience, and mental control. The greatest edge you'll ever have is the ability to remain emotionally stable in an unstable environment. That's the real secret, the psychology of winning. Because when your mind is disciplined, your actions are consistent. When your actions are consistent, your results compound. And when your results compound, your portfolio begins to reflect what it always should have: mastery, not luck. The goal is not to beat the market, it's to stop being beaten by yourself. The day you understand that is the day you truly start winning. Your portfolio will only be as strong as your psychology. So build your mind first, the returns will follow. Most people who enter the market are not investors, they are wishful thinkers. They buy because they hope prices will rise. They hold because they hope things will improve. They sell because they hope they can buy back cheaper. Their entire approach is built on hope, and hope has no structure, no edge, and no place in a world ruled by probability and behavior. The market doesn't reward hope, it rewards understanding, conviction. The kind that holds steady during drawdowns, the kind that resists panic, the kind that doesn't shake when red candles appear, doesn't come from optimism or enthusiasm. It comes from knowledge, it comes from clarity, it comes from a deep, logical understanding of what you own and why you own it. Hope is emotional. Understanding is structural. One fades under pressure, the other strengthens. Every losing trader has experienced this. They buy a stock because someone recommended it, or because it's trending, or because it feels like a good play. Then the market turns against them and suddenly that confidence disappears. Their belief evaporates because it was never belief, it was blind hope disguised as conviction. When you act from hope, you are fragile. You depend on external validation, on news, price movements, analysts, social media to confirm your decisions. When the market doesn't cooperate, you panic, you second guess yourself, you react emotionally. But when you act from understanding, you don't need the market to agree with you immediately. You know what you own, you know its value, you know the risk. You've already accepted uncertainty as part of the process. Your conviction isn't shaken by short-term fluctuations because it's built on logic, not emotion. The truth is simple: you can't stay confident in something you don't understand. When your foundation is weak, pressure breaks you. But when your foundation is strong, pressure refines you. That's the difference between amateurs and professionals. Amateurs hope their trades will work. Professionals understand why they will work over time. Hope is emotional energy. It gives you temporary excitement, but no direction. Understanding is mental energy. It gives you clarity, focus, and control. The market feeds on those who rely on hope because their emotions are predictable, and they buy late, sell early, and make every decision in reaction to fear or greed. Understanding, however, removes emotional dependency. It allows you to see beyond the moment. You don't need the market to make you feel safe because your safety comes from preparation, from analysis, from logic. You've already anticipated uncertainty. You've accepted risk before you entered the position. That's real conviction, not the false courage that evaporates the moment the price dips. Conviction isn't built overnight. It's the result of discipline, study, and experience. It's not loud or emotional. It's quiet and grounded. It's what allows you to hold steady when everyone else is losing faith. It's what gives you the courage to buy when fear dominates and to sell when greed blinds the crowd. Conviction doesn't shout. It acts with certainty because it knows. Understanding means you've done the work. You've studied the company. You've looked at its financials, its business model, its market position, and its long-term potential. You've analyzed how it behaves in different cycles. You've thought about what would invalidate your thesis, and you're okay with being wrong because you've defined your risk. When you operate from this foundation, you no longer need to believe the market will go your way. You simply execute your plan. Hope says, I think it'll go up. Understanding says, even if it goes down, my process remains sound. That's the power of conviction grounded in understanding. The problem with most investors, they confuse confidence with conviction. Confidence can be inflated by short-term success, but conviction is built through consistency. Confidence comes from outcomes, conviction comes from preparation. Confidence can make you reckless, conviction keeps you disciplined. When you build conviction through understanding, you stop chasing predictions. You stop reacting to noise. You stop fearing volatility. You start seeing every price movement as information, not as validation or threat. You become objective. Think about a pilot flying through turbulence. The passengers panic because they don't understand what's happening. The pilot doesn't, not because he's fearless, but because he understands. He knows the process, the systems, and the structure that keeps the plane steady. He knows turbulence doesn't mean danger. It means temporary instability. That's what conviction feels like in the market. You don't panic during turbulence when you understand the system you're flying in. But most traders never become pilots of their own portfolios. They hand the controls to hope and pray the journey stays smooth, and when it doesn't, they eject too soon. True conviction allows you to stay calm when others lose clarity. It gives you the patience to wait for your edge to play out. It gives you the strength to accept temporary loss without emotional collapse, because you don't need to be right all the time. You only need to execute your edge consistently over time. The truth is, markets will always test your faith. Every drawdown, every correction, every red day is a psychological exam. The question isn't, can you predict what happens next? The question is, do you understand enough to remain calm when you don't know what happens next? That's the difference between emotional traders and disciplined professionals. Hope is built on attachment, on the need for things to turn out your way. Understanding is built on acceptance, on the awareness that things can go either way, and you'll still be fine. Hope wants control, understanding embraces uncertainty. If you're building a portfolio, you need to ask yourself, why am I in this position? If your answer is, because it feels right, you're gambling. If your answer is, because the data, the fundamentals, and the probabilities support it, you're investing. Conviction means you don't need the crowd to validate you. You don't need confirmation from social media, experts, or price action. You already know your reason. You already know your threshold for risk. You already know your exit. Conviction is the quiet confidence that comes from preparation, not from being right, but from being ready. Understanding creates peace. Hope creates tension. One gives you freedom, the other gives you anxiety. That's why most traders live in emotional turmoil. They depend on hope for comfort, and when the market betrays that hope, they break. Understanding, on the other hand, doesn't need reassurance. It stands firm because it's grounded in knowledge. You're no longer seeking the market's approval. You're following your process. You know that results fluctuate, but principles don't. Conviction is the antidote to fear. It's the foundation that allows you to remain rational in an irrational environment. When others panic, you remember your reasoning. When others doubt, you trust your process. That's how long-term wealth is built, not by guessing right, but by thinking right. The market is a psychological mirror. It reflects your level of understanding. When you act out of emotion, it exposes you. When you act from awareness, it rewards you. Most traders lose not because the market beat them, but because they never took the time to understand what they were truly doing. You can't fake conviction. The market will test it until it exposes weakness. The moment uncertainty hits, hope fades, and only understanding remains. That's why preparation is power. That's why education is leverage. That's why process beats prediction every time. Every legendary investor, every consistent trader, every professional knows this. You don't win because you know what's coming. You win because you know how to respond when it comes. You win because you understand yourself, your system, and your limits. That understanding builds conviction, and conviction creates the calm, confident actions that compound over time. Hope is emotional fuel. It burns out fast. Understanding is structural power. It lasts forever. You can't build wealth and hope. You can't hold through drawdowns on emotion. You can't stay disciplined when you don't know what you're doing. The only way to build lasting conviction is to replace guessing with knowing, to trade from clarity, not from desire. And once you understand that, your entire relationship with the market changes. You no longer need to chase. You no longer need to fear it. You no longer need to prove anything. You become steady, focused, and consistent, the traits of every true professional. When your conviction comes from understanding, losses don't destroy you, they educate you. Drawdowns don't break you, they strengthen your discipline. Every outcome becomes feedback for refinement, not judgment for failure. That's the beauty of this mindset. You're no longer a victim of the market, you're a student of it. You grow from experience instead of reacting to it. So stop hoping the market will make you rich. Start understanding how it actually works. Stop hoping your stock will rebound. Start understanding why it should or shouldn't. Stop hoping you'll get lucky. Start understanding how to get consistent. Conviction is not emotion. Conviction is the quiet strength of someone who has done the work, faced uncertainty, and found peace within it. When you trade or invest with real understanding, you stop needing to be right because you already are in process, in mindset, and principle. And that is what separates those who merely participate in the market from those who master it. Conviction isn't about knowing the future. It's about knowing yourself, your plan, and your probabilities so deeply that the future can't shake you. That's how you build consistency. That's how you build confidence. That's how you build wealth. Conviction comes from understanding, not hope. And once you live by that truth, you'll never trade the same way again. Everyone who steps into the market wants to win. They want to make money, escape financial limits, and feel that rush of success that comes with a big trade going their way. But here's the brutal truth: wanting to win doesn't make you a winner. Desire alone doesn't build wealth. Discipline does. The market doesn't care about how much you want it. It doesn't respond to your passion, your excitement, or your dreams. The market only rewards structure, patience, and consistency. It punishes emotional traders no matter how badly they wish to succeed. That's why two people can have the same knowledge, the same tools, even the same opportunities, and yet one will walk away profitable while the other loses everything. The difference isn't luck, it's discipline. Discipline is the invisible foundation that supports every long-term winner. It's the quiet, repetitive, often boring act of following your plan when your emotions beg you to do the opposite. It's saying no to impulses. It's holding your ground when fear or greed tries to hijack your judgment. Desire wants the outcome. Discipline earns it. When most people enter the market, they think enthusiasm equals success. They start with energy, motivation, and a dream of financial freedom. They chase setups, react to every price move, and tell themselves they're learning. But soon enough, that excitement turns into frustration. The losses come, the emotions rise, and discipline fades. The truth is, motivation can start you, but only discipline can keep you. Discipline isn't glamorous. It's the act of doing what's necessary when it's uncomfortable. It's sticking to your stop-loss when you want to just hold a little longer. It's not taking a trade because your edge isn't there, even when you feel like you're missing out. It's walking away when the chart tempts you to force a setup. It's not about being perfect. It's about being consistent when it matters most. The market has no sympathy for the undisciplined. It's designed to extract money from those who can't control themselves. Every dollar you lose because of impatience, revenge trading, or greed ends up in the pocket of someone more disciplined than you. That's how the market works. It transfers wealth from emotional participants to disciplined operators. Desire without discipline creates chaos. It makes you chase every opportunity, over-leverage your positions, and abandon your rules the moment they become inconvenient. You convince yourself you're being flexible, but what you're really doing is being emotionally reactive. You're letting desire dictate behavior instead of structure. The truth is, discipline requires surrender. You must surrender your need to be right, your craving for excitement, and your obsession with immediate results. You must surrender to the process, the slow, methodical, sometimes painful repetition of following your plan regardless of outcomes. The disciplined trader doesn't chase profit, they protect process, because they understand that profits are the natural result of consistent execution. They don't get emotionally attached to single trades, because they know the game is statistical. No single outcome defines them. Only their behavior over time matters. Desire wants instant gratification. It wants the rush of a winning trade. It wants validation. Discipline, however, operates on delayed gratification. It understands that real growth happens slowly through hundreds of small, correct decisions compounded over time. Think about this, the market gives everyone the same price data, the same access, and the same tools, yet 90% still lose. Why? Because 90% can't control themselves long enough to let their edge play out. They jump in too early, exit too soon, overtrade when bored, and hesitate when opportunity finally appears. They sabotage their own success because desire clouds their logic. Discipline is your filter. It separates the signal from the noise. It allows you to focus on what truly matters instead of reacting to every impulse. It reminds you that consistency is more valuable than excitement. It transforms randomness into structure. Every professional understands that discipline is freedom. To most people, discipline sounds restrictive, a limitation. But in the markets, discipline is liberation. It frees you from the tyranny of your emotions. It frees you from regret. It frees you from the endless cycle of hope and disappointment that traps emotional traders. Without discipline, every decision feels personal. You take losses as insults, gains as proof of genius, and every fluctuation as an emotional event. With discipline, every decision becomes mechanical, emotionless, deliberate, precise. You don't argue with the market, you respond to it. You don't fight to be right, you fight to be consistent. The disciplined trader doesn't ask, will this trade make money? They ask, does this trade fit my plan? The difference between those questions defines the entire game. One is driven by desire, the other by discipline. One seeks reward, the other seeks process. And here's the paradox, the more you focus on the process instead of the profit, the more profit you eventually make. Because you're no longer reacting emotionally, you're executing logically. The market rewards that kind of consistency. It punishes chaos. The hardest part about discipline is that it's invisible. When you follow your plan and avoid bad trades, there's no applause, there's no excitement. You don't feel successful. But every disciplined decision builds invisible capital, mental capital, and that mental capital eventually compounds into financial capital. Discipline isn't about rigidity, it's about control. It's knowing when to adapt and when to stay firm. It's the balance between patience and precision. It's not stubbornness, it's self-command. It's the maturity to understand that doing nothing is sometimes the most profitable move. Desire screams for action. Discipline waits for confirmation. Desire wants to double down. Discipline respects risk. Desire needs to feel right. Discipline is okay with being wrong as long as it followed the rules. This is why the undisciplined trader can't survive volatility. When the market moves against them, they panic. When it moves in their favor, they get greedy. Their emotions rise and fall with every tick of the price. They burn mental energy and lose focus. But the disciplined trader stays calm, composed, and centered. Their decisions come from structure, not stress. The disciplined investor understands that losses are not failures, they're feedback. Every trade provides information. Every outcome strengthens awareness. That's why discipline leads to growth while desire leads to burnout. Most people think they lose because of bad luck or bad timing. In truth, they lose because of bad habits. They haven't trained themselves to obey their own rules. They let impulses control them. And every time they break discipline, they reinforce emotional weakness. Discipline is a muscle. It strengthens through repetition. You build it by sticking to your plan when it's hard, by cutting losses without hesitation, by taking profits without greed, and by walking away when there's no setup. Each act of discipline increases your power. Each act of emotional weakness drains it. The market rewards those who can delay gratification, those who can watch a stock move without chasing it, those who can take a loss without revenge trading, those who can wait for their edge instead of forcing trades out of boredom. Because discipline isn't just about what you do, it's also about what you don't do. The irony is that desire feels strong in the moment but leaves you weak afterward. Discipline feels hard in the moment but leaves you strong. Desire wants to feel good now. Discipline wants to be good later. And in trading, the later always decides who wins. The professional trader doesn't wake up hoping the market will give them profit. They wake up committed to executing their plan regardless of what the market does. They've learned that emotional neutrality is the real edge. The less emotional energy you spend reacting, the more energy you have for precision and patience. The market tests discipline every single day. It tempts you to break your rules, to overtrade, to act from ego. It dangles opportunity in front of you wrapped in uncertainty. It rewards those who can act with clarity under confusion and punishes those who chase without control. There's no shortcut to discipline. It's not a switch you turn on, it's a state you build. It comes from self-awareness, from observing your emotions and refusing to let them drive your decisions. It comes from humility, from accepting that you can't control the market, only yourself. It comes from consistency, from doing the right thing again and again, even when it's boring, even when it's painful. Desire tells you that success is about making money fast. Discipline teaches you that success is about staying in the game long enough to let compounding do its work. The real professionals aren't trying to win every trade, they're trying to never lose themselves in the process. You see, the market doesn't reward intensity, it rewards endurance. It rewards those who can stay calm while others lose control. It rewards those who can execute when emotion runs high. It rewards those who understand that the game isn't about being right today, it's about being consistent for years. Discipline creates stability. Stability creates confidence. Confidence creates performance. That's the real path. Desire will always be there, the urge to make more, the need to be right, the temptation to break rules, just this once. But the moment you give in to it, the market takes control. Discipline is your shield, it's what protects you from yourself. In the end, every trader faces the same question: will you let your emotions trade for you, or will you trade your plan? Because the market has no emotion, only you do. And the one who controls emotion controls the outcome. So remember this: the market doesn't pay for wanting, wishing, or hoping. It pays for consistency, patience, and self-mastery. The market rewards discipline, not desire. And once you truly understand that, you stop chasing the outcome and start becoming the kind of person who deserves it. The market doesn't reward how much you want to win, it rewards how well you can control yourself while playing the game. Desire fuels excitement, but discipline sustains success. Every trade, every investment, every decision is a test of your ability to follow your plan when emotions try to take over. Those who stay disciplined outlast the dreamers and the impulsive. In the end, profits come not from prediction, but from patience. The market's greatest payout is reserved for those who show consistency, structure, and control, because in this arena, discipline isn't just an edge, it's survival.